What is up, StockTwits family? Welcome back to another episode of CMT Lunch Hour. I am your host, Larry Thompson, aka at Hostile Charts on StockTwits and Twitter. You can follow me there for all my kind of content. As mentioned, I am a CMT chartered market technician. Fancy way of saying I like to look at charts, analyze price action, analyze human behavior, and manage risk, right? And most importantly, make money, because that's what we're here to do, right? Here to make some money. So guys, today we got a packed show, right? We'll be going through the S&P 500, right? Just the choppy action we've seen recently, right? Kind of what's up with momentum stocks, right? Palantir, AppLovin, right? Some of those IBD top 50 names that we all love and have come to adore and made money in, right? I kind of got hit this week. So we'll be taking a look at that price action just to kind of see what's going on there. And then chat, of course, right? We'll be talking about charts and getting chart requests. So chat, I see some names already in the chat, right? Welcome, welcome. Blast the chat with tickers, right, guys? Let's get it going in that chat. Let's blast it with tickers and get some charts going for the fam, right? And lastly, I'll be sharing my favorite setups, right? Maybe some non-traditional plays for the StockTwits fam, maybe some energy, maybe some international, right? So we'll kind of get into that here now, right? Let's first take a look at the S&P, right? Let's start with the big dog. Let's start with the behemoth, right? We might have lost in hockey last night to Canada, but they ain't coming close to our stock market, right? It's S&P 500 over everything. So taking a look at the S&P 500, we've talked about it for several weeks now, this slap chop zone, just messy price action here. We've seen it, right? Like we talked about, above 550, 580, below 610, right? That's your area of slap chop, right? But above that, right, we get above 610. That's the area where I think we can begin to resolve in the direction of the underlying trend, which is up. But we're just not seeing that yet, right? And what, like we've talked about before, one of the reasons we're not seeing that is just math, right? Very simple math on the surface. But like a lot of things that are simple, it's simple once you think about it. So you just have to take time to think about it, right? So what we're looking at here is the S&P 500 new highs and then S&P 500 new lows, right? So top panels, new highs, bottom panels, new lows. And then in the middle, we net those, right? So when you see negative, that means there's more net lows. When you see positive, it means there's more net new highs. So you can see past year, right? Last year was a great year in the market, right? Just all this price action was bullish. We had, insurmountable amount of net new highs. And then to start the year, right, we've seen this chop fest, right? We've seen it muted new highs and we see new lows contracting. And what that essentially means is that we've seen that rotation under the surface, which we've talked about. Like, what's the leading sector this year so far in the S&P 500? Does anyone in the chat know the leading sector this year in the S&P 500? Give you 3 seconds. Well, it's materials, right? Materials were the leading sector as of yesterday in the S&P 500. And if you look at material stocks, they look like crap. But what's tech done, right? What's consumer discretionary done? They've kind of corrected a little bit. So what we're seeing is we're seeing the losers kind of rise a little bit, and we're seeing the winners kind of pull back a little bit. And when that happens, you get this slap chop action, right, in the S&P 500. Some may refer to this as a stock picker's market, right, where you can long certain stocks and short certain stocks. But to me, it's just messy, which tells me that you have to be selective with the target you're setting and manage risk accordingly. Last thing I want to highlight with the S&P 500 is, right, I don't want to sound bearish on here. I just want you guys to be aware of kind of the context for price action and when it occurs, right? So looking here, you kind of see this is percent of stocks above a 200-day moving average, right? You can see to start the year, we started correcting and people were talking about weakening breadth, right? And then we had this little bounce to start the year because we've seen that rotation into those sucky sectors, right? And this is when everyone's coming out, what were people talking about bad breath for? Bad breath, bad breath. Well, we were talking about it back here, right? And we're starting to see some follow through, but we want to see, percentage of stocks above a 200-day in the S&P 500. We want to see it above 60. But I also want to highlight here, if you look at the mid caps and the small caps, right, we're not seeing a lot of breadth here, right? We're seeing these in the 50% range, which means only half the stocks are above their 200-day. And as Paul Tudor Jones said, right, We know Paul Tudor Jones talked a lot about nothing good happens below the 200-day. So if half the stocks are below it, how is the index going to make persistent all-time highs? Right? It can, right? We're in a bull market, right? We have this long-term uptrend. But these are the ways you want to be thinking about this price action from a sector level, from a bigger picture view when you're looking at these individual charts, because you get what happened this week, right? You've had selective breadth in the market. You've had rotation, and you've seen money come out of the leading names. And then this week, what did we have? We had that momentum. We had that momentum pullback, right? And so let's go over here, and I just want to give you guys an ETF to pull up, right, on your screens, on your workstations, right? And look at FFTY, Innovator IBD 50 Fund, right? Top holdings in that are names we've talked about a lot before, right? And in this, ETF is essentially what I would say momentum plays, right? And momentum's done really, really well this year so far until this week, right? You've seen Grail, Hims, Root, Sprouts, Axon Enterprise, right? Palantir, a favorite in the chat, right? Hood, another favorite in the chat. Rocket Labs, a monster in the chat, right? And so what's happened with these names is that these stocks have begun to correct a little bit, right? But that's not uncommon when you have the price action that we've seen. If you contextualize it, they were really, really strong, and people need to take funds from somewhere if they're rotating, right, into other names, right? I wouldn't panic about any of this, and we'll kind of get into some of the, I see the chat's blowing up today. What's up, Matt? What's up, Lant? What's up, Ray Minville? What's up, Juco? I'll get to all these stickers here in a few minutes. I just wanted to highlight kind of what I'm thinking of when I see this momentum, right? What I think about is you have to now kind of look at the pullbacks and understand you want to buy strength after the dip, right? You don't want to buy the dip. You want to buy strength after the dip. So we'll kind of get into an example here, right? So looking at Carvana, right? An example of a momentum stock, an example of a stock that's done really, really well over the past year, right? And so this is now taking from 2024 year to date, right? So that's from 2024, right? So a year and 2 months of price action. You can see in Carvana, every time we've gotten to this 50-day SMA, right, you want to buy strength after we get back above it, right? We kind of test it, we test it, right? We test it. And so this is how I would analyze a lot of these momentum stocks, is you want to buy strength after the dip. You don't want to buy the dip, right? What if you would have bought the dip in Carvana right here? Oh, it's testing its 50-day buy, right? That's something that those rookies do. And we're not rookies in the chat, right? We don't want to be rookies. And so that's something we want to keep in mind, is that we want to buy strength after the dip. And that's what you've seen. And then, right, this correction kind of occurred. But these happen in the market, right? It's kind of the ticket you pay to be in these volatile names, which I know chat will get into some of the volatile names in the, I see GRR, right? I see a lot of people talking about GRR, but on the flip side of GRR, there's been these other stocks that need deodorant, right? These stocks have been stinky, right? No free sponsors, but some of these momentum names need some deodorant this week, right? So that's kind of the overview I just wanted to go over, is that at the index level, it's kind of choppy, and we're seeing some of that kind of price action unfold in these momentum names this week. Nothing to panic about, right? Still long-term uptrend, but we just want to assess strength after the dip in those types of names. So let's kind of get into here some chart requests. I see the chat is blowing up with chart requests. So respect, keep sharing them, and I will get into some of those names now. Chat, we making money this week, right? Kind of a tough week. That's okay, though. We have tough weeks in the market. It happens. It happens. All right. Share the screen here. Get into some of these chart requests. Get into some of these chart requests. Starting with ASAN, right? I see this one at the top of the chat, right? So look, we had great price action, right? Let's kind of zoom in a little bit, right? We kind of understand there's a base here, right? We can kind of see there's some overhead supply, right? You can kind of see that here on this chart. I'll just annotate it for the squad real quick, right? Kind of this $25 level, right? We talk about this every week when we look at these types of patterns, right? You might have to just wait a little bit, right? You can kind of see here on this chart, right? Excuse the right? Kind of see that's kind of where it pulls back. But what do we have this time that's different, chat? Right? We actually have strength. We have a dip that made a higher low, right? So first ticker in the chat is a W, right? I like the way this is building, but what do we talk about? We buy strength after the dip. But longer term chart, love this weekly, right? This is a W from the chat. Above 25 is where I like this, but let's zoom in, right? Let's zoom in a little bit, right? You kind of have that, you have that gap up and you have this basing pattern here, right? And so we want to buy strength after the dip in this name, right? So wait for this to get maybe a day or two above, right? Two back-to-back closes that are green, right? And then maybe you get some exposure to this name, but you don't want to catch a falling knife. You want to wait for get that exposure after we kind of start going back up in a name like this. So that's something I would wait for here, but overall, I like this. I like this name, right? I like the way this is kind of shaping out. It's going to take time, right? But if these are the types of names you're after, you just kind of have to wait for that price action to resolve. It's just what you have to do in these types of setups. So something to keep in mind, something I would keep an eye on, right? Is just keep an eye on kind of these types of setups, because I think that's what we're going to look for. Is we're going to look to buy some strength after this dip. So ASAN, Asana, great ticker, great one in the chat, right? So I see some people mention SMCI. You know what? I don't even have to mark that one up because we've already marked it up in past weeks. And shout out to the chat, right? Shout out to the chat because this is a name, SMCI. Let me get to it real quick here. SMCI is a name, right? People in the chat have been buzzing about it long. I see you mentioning SMCI. Shout out to you, right? If you got in this name, good for you, right? And I think that's what we're seeing here, right? We see this, saw this bottom, and then you buy that strength after that dip. So this is a great play. I don't know what you do with it right now, right? This isn't like a name I would be adding to at the moment because I think we might be running into some resistance up here. All right, this chart's a little ugly, but I'll zoom in a sec. This is a longer term view, right? Because we want to align our charts with our time frame for investing, right? That's something you learn. Shout out to Brian Shannon, right? Multiple time frame analysis. You want to align the time frame. So I tend to trade a little bit longer term, right? Couple weeks, couple quarters, right? And other people tend to be short term. So zooming out here, I like the way this is reversing. But when we zoom in, right, we probably start to see, okay, we see this base building, right? Nice base building. Whoops. Right, let's see this base building. Let's remove this ADX line. We don't need that, right? Let's just update this. Right, so you see this base building here, which we like to see, right? Don't get caught up in the chart patterns, guys. I'm not a chart pattern. Even though I'm a CMT, right? Study the chart patterns. I think chart patterns, what they tend to do is people get too caught up in what type of chart pattern they're trying to identify, when really all a chart pattern is telling you is where there's supply and demand, right? Where the concentration is occurring in the market participants, right? That's the real information. The information isn't the name of a chart pattern. The name of a chart pattern came after the pattern started working, right? It's not like someone named it and then the chart pattern started working all of a sudden, right? It's just a way to identify types of setups, right? So this is what we have as a base, right? Right? You have this base here in SMCI, right? And it's against this $65, $70 level, right? So as soon as we get above here, man, you got to be long this name above 65, right? That's the level. And we can see it in this chart. We've had a nice run up, but these things need to take a breather, right? They got to cool off for a minute, and then you buy some strength after the dip, right? So we got a little dippy here, but we get back above 65. I really do like SMCI. I think it's a good name. So good looking chart, good one from the chat. I think these are the types of names you continue to work on, and names we continue to like. So I don't think this price action is going to continue downward. I think it's just like a correction, right? Everyone's kind of on one side of the boat. Everyone's talking about momentum names. And so it just kind of takes a minute. So next chart we'll look at is IBRX. Like what we doing here, chat? Like, what is this, right? APRS in the chat. I'm calling you out. What is this, man? Or woman, right? What do we want to do with this, right? Let's zoom out a little bit. Maybe it looks good on a zoomed out chart. Not really. Not really, right? Like, you see an edge in this? All right, I see a bunch of overhead supply. I see choppy price action, right? Maybe we're starting to build something. Maybe. You zoom in a little bit. Maybe we're starting to build something, right? What's the thought process here? Is this company curing cancer? Biotech. Is it curing cancer, chat? I don't think so, right? It doesn't look like it's curing anything. Yeah, don't love this name. I guess if you have to be in it, right, you kind of have your, I would get out of below 325. I wouldn't be in this name, chat. This is an L from the chat. That's okay. It's a Friday, maybe a little tired. That's okay. It's not something I like. IBRX, not what we like to see. Chat, we got to get better names than this, right? Better names in the chat than this one. Better names in the chat than this one. But that's all right. All right, LLY. We've talked about this one. This is a setup I've shared in the past. EY Lilly, love it, right? I'll kind of zoom out and show you kind of what I like about the setup to start. Boom. It's a 20-year monthly chart of Lilly. It looks like they know how to make money. It looks like they know how to create value for shareholders, doesn't it? Why would we bet against this? This is $1 trillion stock. Why would we want to bet against something like this? Look at its drawdown. Look at its performance. This bottom panel here is its performance against the S&P 500. Constant outperformer. So this is a name, right? When you see the dips, you want to buy them, especially if you're a long-term investor. So then when you zoom in, right? I looked at this on a weekly basis. What do we got here? Right? We have this not a top pattern, right? Kind of have really well-defined risk. This is where I got long. Really well-defined risk. And a lot of people at home, this is why you don't want to get caught up in chart patterns, right? Everyone starts to do their analysis, right? Watches 2 or 3 YouTube videos, and then they want to go home and start shorting stocks because they see something like this, right? But what they forget is, you know what's a lot stronger than this pattern? A long-term uptrend is a lot stronger than that pattern, right? And if you read the books, right? If you actually read the books and want to take time to learn about this stuff, you'd actually learn that most of the time these are continuation patterns, right? They resolve in the direction of the underlying trend. That's what we got here, right? We have a resolution in the direction of the underlying trend. So I love Lilly. I don't really know where let me zoom in here in a sec and kind of look where the entry is. But in general, this is a name you can put in your retirement account, let it be, right? This is a longer term play, but we had that nice setup around 700 to kind of get long. And we've made money in this name because of that, right? I think I was up 11. It was like 11% a couple days ago. Woo, yeah, about 20 now, right? Against, right, bought strength after the dip, right? This candle here. Zoom in, right? Kind of messy, right? When you zoom in a little bit. Let's back out a couple months. All right, you zoom in a little bit. You can see, right? Well-defined risk reward here. In Lilly. These are good patterns to be trading, guys. It's called an oops. Larry Williams talks about these oops. Right? They do this fake breakdown. Fake breakdown here, right? And then resolution, and then higher low, right? Higher low. And then there's your buy signal. Or you can wait until, right? You can wait until we get back above a moving average and then kind of trade it up. But I love this name. I love Lilly in general. I think healthcare is kind of mixed, right? If you dig into healthcare as a whole, you really have to be selective in your stock picking process. That's a stock picker sector. Healthcare as a whole is a stock picker sector. So this is a name within it that I like, but look at UNH today, right, fellas? UNH absolutely bombed, right? Got destroyed. But when we zoom out, right, you can kind of see it's been trading sideways, right? It's been trading sideways for a while now. So it's been in this long-term range while Lilly's been going up. And you can see the relative performance, right? This bottom panel is UNH versus SPY. That's called relative strength. And although it's gone sideways, the market's gone up. So really, you should have been out a while ago because we're trying to outperform the market, right, fellas? We're here to make money. We're not here to be Fidelity or Vanguard, right? We're not trying to be passive. We're trying to be active. So Lilly, great name. That's a W from the chat. Overall, I like that name a lot. That's a good looking chart. Vert, VRT. Vertiv Holdings, right? Momentum names got hit a lot this week, fellas. Like, we know this, right? Crushed. Right? Zooming in a little bit. Right? This is kind of my level. It's kind of my level, but let's do something else with this one. All right. So for the chat, let me make a couple updates to this chart real quick, and then I'll let you guys know. So we're gonna make the 50-day red, and we'll make the 200-day gold. All right, let's update this chart. And then we're gonna make all the candles just black. Actually, we'll keep it blue and red. We'll keep it blue and red. I want to show you guys something on this one. So one of the things you want to look at when you're doing some analysis on price action in these momentum names is kind of when you have a correction, what are potential areas of interest on the way down, right? So think about it for my one chart I have of the S&P 500. This is a key concept. I'll share this tab, right? So this is a key concept in analysis I want you guys to understand is on the way up, draw your risk levels, right? On the way up. You can see here, I draw these on the way up. That way, if this does correct, I kind of know, okay, 580 might be the next area of support. Might be a level I want to buy. Guess what? We got that buy signal here, right? 560 lines up pretty well with that 200-day moving average. If we get down there, really might want to buy in my long-term account. Might wait in my short-term account. But that's one of the things you want to do with these momentum names is you want to draw your levels on the way up. That way, on the way down, when you were making money, your mind was out of the game, right? You already had your plays drawn up, right? Think about the NFL, right? Think about sports. They draw their plays in advance, right? For certain situations, right? Because you want to be aware of your situations. And so that you really want to get good at this because this is what separates the amateurs from the pros is understanding risk levels. Because everyone can make money when those momentum names are going up, but you want to draw your risk levels as it goes up so you know where to get out on the way down. So that's the first thing I'll highlight here. Let me get back to sharing this vert chart. Right, so let's zoom in a touch here. Right, so vert. Okay, first thing we'll do here, let's just zoom out a little bit. Let's go through this in real time, real quick. Okay, so if I was an owner of the stock, right, I would be looking at this price action on the way up. And what did we have? Right, we had this like base breakout here. Right, it's what we had right here. It was a base breakout. Okay. This is where I would have purchased it. Right, guys, go through this exercise with your stocks, right? That's your weekend homework. If you want to make money and take this shit seriously, go mark up your charts. Don't just open them and be like, it's up today. Cross your fingers. Mark up your charts, right? And save them somewhere, right? Save them to whatever charting software you use. Look, we had this breakout, right? And then this is probably your risk level, right? And what's that line up with? The 200-day. It's almost like it's magical, right? But it's not magic. It's just human nature and price action. So if you like VRT, I would be looking to buy it once it gets back above this key level here, this 105, because you can always buy it back, right? One of the things I learned early on in my career when I wasn't making money is that the reason I wasn't making money is because I lacked self-confidence. And I always thought this trade had to make me rich and I couldn't wait for the next trade. But once you build that confidence and you trust the way you analyze the market, you realize I don't have to get rich off of this one trade. I can get rich off of it next time. It'll give me another chance. You can always buy it back. So against this 105, 107 area, right, you want to see some strength from here. And then that's would be my level. But vert, beautiful looking chart. If this is making sense, guys, let me know, right? This is what we want to see here, right? Is I want to see you guys mark up your charts in advance. I want you guys in the chat in a couple weeks start calling out levels for me. Hey, Larry, what do you think about vert against 105? It's back above it, right? That's what I want to see because that's how we get better as a squad. So vert, W for the chat, right? I like the way this price action looks overall. I think this is something we keep on our radar, right? Maybe set an alert once we get back above 108, 109, right? Get back above these levels. And I think it's a name we can keep an eye on for sure. So let's save this one. And we'll come back to that in a couple weeks, see what it looks like. CYDY. Okay. 27-cent stock, right? Not my cup of tea here, right? This isn't my type of pitch. This isn't something I would be trading, guys. But let's just zoom out. Yeah, see? Right? Back to my sports analogies. If you trust your process, why are you throwing a Hail Mary every play? Right? If you trust your process, you can run the ball, right? Get 4 or 5 yards, get 4 or 5 good trades. You don't have to swing at penny stocks that are at 28 cents to make money in this market, right? We don't have to be doing this stuff, guys. Trend detector, I get it, right? It probably did reverse trend, right? You zoom in, right? It looks pretty, but you look at all this overhead supply. You know how many people want to sell this at 50 cents? A lot. You know how many people want to sell this at $1? A lot. There's a lot of bag holders in this type of stuff. So don't be effing around with these types of names. There's much better tickers out there, much better charts. If you are in it, right, those type of names you got to manage risk against. Because look at this. This went down 32% in 3 days, right? So you got to hold on, right? You got to have them Nick Sirianni set in between your legs if you're holding on to names like this, right? Not something I want to be doing. A lot of people talking about vert in the chat. Yeah, it's a great chart. Someone mentioned Berkshire. All right, let's talk about Berkshire for a minute. Right, I already have that one marked up, so I don't even have to give you guys a fresh chart. Berkshire, right? Notice as I go through some of my charts, guys, what do you notice? Right, this is one of my save charts. The levels are marked in advance. You notice that? Because then when I'm in the game, when I'm trading, when I'm trying to manage my money, I'm not thinking about it. It's already been done. So look here, right? These levels were already here preset, right? You guys saw it here in real time. I didn't just do this. I didn't just make up these levels. These were levels I already had drawn on the chart. Look, we have a bull flag, right? Right, we're just building a bull flag. I think above 480. Chat, this is a W. W in the chat. Berkshire above 480. I'm writing that one down. That's a great looking chart. And why? Why do I say that? Well, Larry, it's trading sideways. Let's zoom out on that pup. Boom. Berkshire above 480. Green Girly. Green Girly, you're crushing it. You got a good eye for charts. This is the type of names we want to be in buying the dips and breakouts. These Berkshire names, right? That's what we want to see there. We want to see this resolve into the direction of the uptrend. So Berkshire against 480. Great looking chart. Great looking trade. Shout out to the chat. Way to keep good eyes on that. Next one we'll look at is Verna, VRNA. Woo! Verona Pharma. Let's zoom out for a minute, right? Beauty. Beauty. Beauty for that one, chat. This is a great looking chart. Train guy, right? This isn't a train, but I tell you what, it's steamrolling, right? It's up and to the right. What can I say about that? What do you want me to tell you about this chart, right? Maybe some risk levels. You just hold this puppy, right? Set a trailing stop. Set a trailing stop, which we'll talk about next week, chat. I'll prepare some stuff around trailing stops, but I'll give you guys a quick, easy trailing stop. So one is called a chandelier exit, update chart, right? And it's this green line. Real quick, I'll just remove these other lines. We'll make this solid thick. We'll do color. We'll put it as gold, right? So you have this trailing stop. This one isn't perfect. It's just an example, right? It kind of follows the price action as it goes. You can see that here. right? It sets a volatility to the downside. So 59, right? You're looking at 10, 11% downside, right? But I would just set a trailing stop and let it run, right? What some people do too, chat, is especially as you learn and you get better at this, and maybe you read some of the CMT material or you learn from guys in the past, if you want to wait for confirmation to sell because you believe the trend is really strong, one of the things you can do is you can wait for it to close above a certain indicator for 2 days, right? Maybe wait 2 days, right? Or you put a moving average on it, and maybe you wait for the smoothing average to kind of stay below it for a couple days until you get your signal, because sometimes you'll get whipsaws. So chat, that's how I would kind of think about this one. Beautiful looking chart. VRNA from Train Guy. Great looking chart. People still talking about Vert. I love it. Vert, beautiful looking chart, right? That's a good looking one in the chat. I love the, some people got some humor in the chat. I love it. Cooper, Copper, right? Carlo, I dig it. I dig it. You guys have some funny names. And the funny thing is, I don't even know, D's might be a coin, right? It might be a meme coin, right? D's, right? I get it. D's nuts, right? But might be a meme coin for all I know. So if you're into those types of things, there's other websites for you out there, right? Maybe not StockTwits, but I believe Grinder's a ticker, right? Grinder is a stock, publicly traded company, right? If you're into D's, right? So maybe that's for the chat that's interested in D's. I don't do meme coins, but this might be up your alley, right? Something like Grinder, right? Good looking chart. So if you can't invest in D's, you can invest in Grinder, right? That might be the underlying story here. Is Grinder's a good looking chart up and to the right, right? So I don't know if that corresponds with HIMS, right? HIMS corrected a little bit today, right? These momentum names are going to have these pullbacks. Perfectly fine. Just buy some strength after the dip, right? HIMS, right? Pulling back to the 20-day, right? This is called a doji candle, indecisive candle, right? Indecision, because what happened is sellers sold it down. You can see that here. Seller sold it down, and then buyers bought it up. So then it's just kind of middling in the middle. But we're going to see that. So then you might want to wait for some strength after that, and those names like HIMS, etc. So I see some Google, some Amazon, some NVIDIA, right? I'll just go through the Mag 7. Let's go through the Mag 7. All right, and I'll show you guys my charts that are pre-marked up, because like I said, that's what we should be doing, right, if we actually are serious about this. All right, so we'll start with Apple. Look at Apple here, right? So against that 140 level was my level to, or sorry, 240 was kind of my level to manage risk against, right? And we're kind of up since then. Apple seems to be the defensive tech, right? It kind of trades like if it was a staple of tech. That's kind of how you see this price action occurring in Apple, is like as if it's a consumer staple tech company, which kind of makes sense, right? I'm not going to get rid of my iPhone. I'm not going to get rid of my Mac, right? I'm kind of immersed in the ecosystem. I have my AirPods in right now. Apple against 240. Meta, right? This was a momentum play, kind of corrected. Look, it used to have that not a top pattern, right? Just like that Lily chart, and that's where we purchased it. And then you just set a trailing stop and let her go, right? Unfortunately, I got out here. I didn't get back in this name. I wish I did, but that's kind of what it happens. Meta, right? If you're looking to manage risk in Meta, we're starting to get below that 20 days. So your next ramification might be that 200, which is 557, which lines up with this level here, right? So if you like Meta, right, I could see it pulling back here, right? Why not? But I would like to see it make a higher low, which it could do, but that would kind of, you just kind of want to manage risk. Look at the RSI, right? You want it to stay above 40 in uptrends. That's something else. You can look up Connie Brown and Andrew Caldwell. Connie Brown and Andrew Caldwell, two pioneers when it comes to kind of RSI analysis. Also, Wells Wilder, the original inventor of the RSI. So, but you can kind of see RSI staying above 40 is what we see in bullish regimes. What do we want next? Amazon, right? This is why we're seeing chop at the index level, like we talked about, right? But this is why we draw our levels in advance, because we got out once it got below 235, but now we might be looking to buy it, right? We see strength after this in Amazon. right? This is probably on the backs of Walmart doing what Walmart's doing, but this is what we want to see, right? It's a wish list. But see if 217, 215 can turn into support here, right? If not, that's tough for the overall market because these are the big names, right? But Amazon against 215 is my next risk level. Kind of sucks. It was annoying. This failed breakout. We're seeing that in a lot of charts, right? Avago kind of had the same thing. Had that failed breakout. Broadcom, right? This was kind of that level. And then price action just kind of got messy. I wouldn't be surprised if it comes back down here, but that's what we're seeing. We're seeing a lot of this, right? And these false breakouts, right? This chart, false breakout. It made a new high when? February, right? And then it hasn't made a new high. That is indicative of that breadth chart that I've shared with you guys before, right? That's indicative of this, right? This is the Amazon chart. This is Amazon. This is all those, this right here is all those stocks making new highs. And then chop fest because we've made new highs and then we've corrected. So that's what we're seeing here is we're seeing that muted new all-time highs is not when you see persistent new all-time highs in the S&P 500 because we need these stocks to turn back around and get going again. That's why we're seeing that rotation under the surface and we're seeing that slap chop sideways, right? It's all correlated. This is how you analyze the market and really, really kind of start to understand it. But I digress. We'll get back to some of the charts. All right. Berkshire we talked about, right? Google. I see Google in the chat. See, Google, another example, right? I drew this in advance, right? You guys saw it was on there, right? This line was already here because you draw your risk levels in advance because you want to know where you're supposed to be getting out or where you want to buy. Right. That's what we see here. This 180. Let's see if it can change, turn into support. Right. That would be big for the market. Big stock in the market. Let's see if it can do it. But tell you what, doesn't look great. Right. I wouldn't be in it below 180. Right. Maybe if you're a longer term investor, sure. Right. But I don't think we're talking about longer term here. But below 180, it's right. It has downside to 160. It's another 8-10% downside. And this is, right, this is the chart. This is the glove, right? The glove doesn't fit, right? It's a consolidation. Show me. I want to see it resolve in the direction of the uptrend, but it hasn't yet. I can't say it's going to resolve higher if it hasn't yet, right? I can't say guilty if the glove don't fit. Doesn't matter what you think. Market needs to show us. But for right now, it's a consolidation, right? This is NVIDIA, Google, Amazon, Meta, Tesla, Apple, Microsoft, right? MAGS, Roundtree, Big Tech ETF, right? This is just consolidation. But this looks to break out. That's probably when Mr. Market breaks out. And we've seen it in the past. So MAGS, good chart to keep an eye on. And then Microsoft, just a turd, right? Just trading sideways. Don't have much to say here. Below its 200-day. Been a chronic underperformer the past year, 2 years, honestly. Kind of see it here, just chopping sideways. And that's where that relative trend, right? Even though price isn't breaking down, you probably should have moved to other investments. So that's what we're looking at here on Microsoft. All right, what other tickers we got in the chat? NVIDIA. Good call. Almost forgot about NVIDIA. Look, hand up. You guys saw it, right? You guys saw it. Already drew the risk levels. Already drew them. Right? Charting is like watching film, right? You got to watch film to get better. You got to keep your charts updated. Right? So yeah, this 140 level. This will be my hot take for the day. Short NVIDIA below 140. Right? Short it. Short NVIDIA against 140. That's my hot take for the day. I'm pretty long the market. Looking for something to short. Why not NVIDIA against 140? Let's do it. Let's ride it. Let's ride it. But if it's above 140, I don't want to be short it. So yeah, pretty clean risk reward there below 140. I think you're going to see, right? Why would this break out, right, when those other Mag 7 aren't? I don't know, right? So why not? Why not short it? Why not short it? And then Tesla, right? This is what we're seeing. Chart's already marked up, right, chat? That's what I want to see with you guys. I want to see you guys marking up, chat. Right? We saw the breakout, and now it's not breaking out. Choppy price action, right? Pretty messy, right? Don't get caught up in the chart pattern. Just understand, looks toppy. Looks toppy, right? Anyone want to short this below 320? All right, maybe you short it below 320 if you want to be crazy, right? You want to be crazy, short it below 320. Maybe we get back to 265. It's about 18% downside. There you go. Have some fun with it. But yeah, the Mag 7 look pretty average overall. Little different in the market. Chat, keep them coming. Green Girly, I see you with the Berkshire Balancing Act. NVIDIA, just went over NVIDIA Balancing Act. What's your level on NVIDIA Balancing Act? Choco Bond, HE. Let's take a look at that one. What's HE up to? Hawaiian Electric. Okay, shout out Hawaii. The Hawaii ran on pineapples. Let's zoom out first. Guys, what are we doing here? Choco Bond, what we doing? Why we like this name? This is a mess. This isn't me. Does it look like this company knows anything about how to run a company? What'd they do here? Fraud? What was going on? August 2023. What happened to this Hawaiian Electric Company in August 2023? Something. And then what happened again in August 2024? Back-to-back years. This chart doesn't like August, huh? Rough month for Hawaii. I don't know what to do with this guy. Let me zoom in real quick. Okay. Shorter term. All right. I mean, I don't know what to tell you here. Not my type of trade. Yeah, I don't even know. There you go. I guess that's what you're seeing. I don't love it. Not my type of move. Not my type of pitch. But thanks for sharing the chart. The fires in Maui. Ah. Yeah, I don't want to be trading companies that have to deal with that type of stuff, right? It's sad, but we don't need to be, if you want to do charity work, go volunteer, right? Don't buy some stocks. If you want to do charity work, go volunteer. So, S. Great long-term investment. Recent catalyst is a new CEO taking a wheel. They're really getting serious with their business. Okay. New CEO taking the wheel at S. Satic Group. Okay. $3 chart. Right. What do they do? Let's take a quick look at what S. does. Right. These types of names, I just kind of want to understand what they're doing. Consumer staples. Supply chain solutions that address growing food security challenges around the world. The company is an agro-commodity sourcing and trading operations for food feed products such as soybean, meal, wheat, and corn. Okay, my question for you, right? Whoever's sharing this, let me get back to the chat real quick, right? So, Juco, my question for you would be, you like the CEO, sure, right? But it's the agriculture space. Agriculture is crushing it right now. Why is this stock not, right? Like, sure, right? Recently it's doing well. I'll give you that. Right? About 26% off its lows. But let's zoom out, right? Like, you want to own agriculture? Let's just buy some agriculture, right? DBA. Check it out. Invesco DB Agriculture Fund. You want to get exposure to soybeans and other commodities. This might be the way to do it. I don't know if I want to be in company that I'm relying on the operations to turn around. It's hard to turn around companies, right? That's what those bases are that we trade. Those bases are turnarounds, right? Think of Meta, right? This is a turnaround story that was successful. They take time, right? This took from 2021 until 2020. This is a 3-year turnaround process for Meta. So I would just give it some time. I think if you're in the name, stay in, right? You can stay in that type of name, but I would just give it time because it's probably going to take time to turn around a business. Also, I'd probably put on my CPA hat. I don't have time to do that today. That's not the point of this, but maybe just see what you'll want to see is you'll want to see better capital expenditure, right? You want to see them spend money in things that actually add value to the business. So things like return on equity, right? You want to see CapEx be sufficient to actually sustain a business, see what cash flow is doing. You want to see improvement to cash flow. Those are the types of things we want to see when a new CEO comes in, because a lot of people do this, right? But we actually want to see the work. So good stuff there. Last chart, SMR, and then I'm going to dive into some of my charts, right? So I have a couple trade setups that I like. SMR, New Scale Power Corp, right? Kind of correcting a little bit here, but right against 17, 18 is the level. So let's zoom in a little bit on it. Yeah, it's starting to break down a touch, but that's okay. Right, this was the breakout level. Right, and then that kind of lines up with the 200-day, right? It's an art, not a science. Right, it's funny when people talk about like how technicals, right? Like people draw their levels where they want. Well, show me a fundamental ratio that's perfect. Every stock that trades at 11 PE ends up 10% at the end of the year. Show me something, show me perfection in valuation, and show me perfection in macro analysis, and show me there's not wiggle room, right, for the art of the process, right? Every process is like that. SMR, I would manage risk against this red line here, right? That's the 200-day. I'll make those a little bit louder for you guys. Right, against that red line, that would be my risk level. But in general, I do like nuclear, right? Another ETF, if you're interested in this type of area, is Nukes, NUKZ, right? Looks similar. But yeah, I think nuclear is a decent place to keep it. So we'll end with that nuclear chart. Shout out to the chat. VRT and Berkshire, probably my 2 favorite setups today. I see someone said Moderna short. Let me get that. No man left behind mentality here, right? This is America. Moderna short, sure. Right? Maybe short it, keep it short against this 50-day, right? That would be my risk level. So make sure I get to this. No chart, no ticker left behind. Yep, there you go. That's your level there. 37. Zoom in a little bit, right? 37 is kind of your level there. So good stuff from the chat today. Let me show you a couple of my setups, right? A little show and tell here. All right, China, right? Everyone's talking about China, right? I'm in the trade. I think it's annoying at this point. I think CNBC's all over it. Everyone on Twitter's all over it. But, right, just like everyone was all over Palantir and then it pulled back and people got out, you got to have conviction, right? So above 35 in K-Web, I think it looks good here, right? Look what this is doing when America's chopping sideways. China's just now breaking out, right? So just something to keep on keep your eyes on, right? If the Mag 7 keeps struggling, we're gonna have to. People are gonna start looking for growth elsewhere, and you know, China might be the story, right? I've seen some charts on their money supply, yada yada yada, but maybe just keep an eye on K-Web, FXI, the names within it, right? Maybe just sprinkle a little exposure, get a little more diversified when the market's chopping, right? Or sit in some cash and chill, right? Wait for the actual breakouts to occur. Couple other charts that I just want to talk about that we've highlighted in past weeks: Affirm and SoFi, right? Those 2 companies in the medical space. Sorry, financial space. What am I talking about? And you can kind of see here, these were those high momentum names and they kind of got hit a little bit, but that's why we draw the levels on the way up. So if you bought this breakout, you're probably getting stopped out here. That's common. It happens, but it's a small loss. And then look for another set up, right, in a firm. Same thing with SoFi, right, failing to break out. So I'm just waiting for this. I'm waiting for this pattern to resolve here, right? And we're not seeing a lot of resolutions in the market, right? We're seeing a lot of chop. Next theme I want to talk about quickly with you guys. I don't want you guys to get left behind if energy starts outperforming. I know it's lame, right? I know Oklo. I'll get to Oklo. I see that in there, Green Girly. I'll get to Oklo in a sec. Yields, energy and yields, right? So one thing I'll note about that is they kind of correlate over time, right? You can see it here on this chart. And so just be aware. Just keep an eye on energy. Don't rule it out, right? Just energy above 95, XLE above 95 is something you want to keep an eye on. This long consolidation, but looks like it might break out soon. So just keep an eye on that. Next thing I want to talk about was kind of mentioned healthcare. Some of these defensive areas are looking decent. And healthcare, as I mentioned, I like Lilly. That was another one. Shout out to the chat for Lilly. One of the things I want to mention is Abbott Labs and Cardinal Health. Two good-looking charts within healthcare, but healthcare as a whole looks average. So healthcare is really a stock picker's sector. So you just have to go through the charts in healthcare and kind of find the names you like. But I like Abbott Labs. I like Cardinal Health. Those are some longer-term uptrends. And then in terms of those energy names, look at something like Baker Hughes, right? Already breaking out, right? In terms of XLE trading sideways, Baker Hughes is doing well. Same thing with EQT, natural gas play against 50, right? It's another name that I like. And so those are the charts from me, right? I think I'm looking at other sectors, right? I'm not so concentrated on the Mag 7 right now. We have some energy plays. We have some healthcare plays. We have some international plays. Silver looks good. Gold looks good. So just when you're running your scans and you're looking at stocks, just make sure you don't have a prejudice against things that look boring, right? Because energy looked boring for a long time and then it doubled, right? Tripled, right? Went from 30 to 90. That's not boring. That's real money to be made. And when that was happening, other areas of the market weren't doing well. So just keep an eye out for energy. Keep an eye out for some of those healthcare names. And I will get to the last chart, Oklo and Holo, right? So I see two in the chat, and then I will let the squad head out. Oklo, right? Pulling back here. That was kind of the level, right? You had your breakout. You had your breakout here in Oklo. There it is, right? That would be the level, 30-ish, right? I know it probably sucks saying that because it's like, oh, give me something better. But that's the price you pay when you want to be in momentum names, right? You got to understand some of that risk, which is fine. Just be aware. Holo. What are we doing, chat? We're not ending on Holo. What the heck is that? We'll end on gold. Holo, that's an L from the chat. Someone sneaking in micro cloud hologram. What are we doing? We're not sneaking that in. We're not ending on that. We're not ending on that. Let's pull up this gold chart. Right, probably going to pull back now that I'm sharing it. But this is why sometimes you look at long-term charts. Because look at this breakout. Look at this breakout in gold, guys. Huge breakout. Keeps running. So just keep an eye on other areas of the market, guys. Something you want to keep an eye on is gold, energy, healthcare, right? Kind of different areas of the market. So just something to keep an eye on. Oklo and Holo. I don't know if I was sharing my screen. My fault for that, guys. Oklo, like I mentioned here, I would manage risk against $30. That's really just the story here is this breakout that it had. Draw that one more time for you guys. Right, you had the breakout here, and then I would manage risk against 30. It's a long level, but that's what happens when you buy momentum names. And then Holo is up a turd. But guys, thanks again for joining this week. I appreciate all the love and supports. We will keep sharing charts. keep going through it, right? Every week, right? S&P's choppy. Momentum names are pulling back a little bit, but just know it's a bull market, right? Just understand that although price action might not be what you want it to be, buy strength after the dips. Draw your levels on the way up. That way you know where to get out on the way down. And right, be willing to look a little different, right? Be willing to look at stuff that's not US tech. Be willing to look at China. Be willing to look at gold, commodities, silver, DBA. And yeah, just continue to put stuff down. I will be out next week, but I will be back the following week for another CMT Lunch Hour. Feel free to reach out to me at Hostile Charts on StockTwits, at Hostile Charts on Twitter. I write weekly on Beehive, and that's also Hostile Charts. So reach out, share some charts, and we'll keep grinding, guys. So appreciate it. Y'all have a great weekend. Cheers.